Welcome to our virtual NAIOP Southern Nevada breakfast. My name is Dave Strickland. I'm the president for 2021. This morning's program, it's a little bit different. It's virtual as well as in person at the Orleans. We gave the members an opportunity to meet in person at the Orleans to view this broadcast together. And there's about 65 there at the Orleans. Who else is going to want to miss the eggs and bacon? So there we have those at the Orleans. Cool, Chaim. Thank you. And welcome everyone. That's fantastic. As restrictions are released, our board will continue to transition our programs to increase the in-person opportunities, and we'll also continue the virtual content as well. You know, it's interesting. We're in the middle of a legislative session, and last Friday, the deadline for the first round of bills hit, and about 65 that NAIOP was tracking through our lobbyists. That's how many we're tracking. And then, so now we're tracking less than 30. And so you can see everything that dropped off. It's important to note, look for the government affairs alerts that are video just to give you a report on what's going on. And also I want to thank all those that reached out to legislators. We had Terry Resch, Matt Hoyt, Chris Fenimore, Michael Newman, myself reaching out to people once that they got those member alerts to reach out to the legislators to potentially kill the detrimental bill that we were facing, a $5 linkage fee per square foot on industrial, a $3 square foot on office. So that's dead for now, but we appreciate all of your participation in notifying and giving your thoughts to the legislators. And then I also want to recognize and thank our President's Circle sponsors who are so instrumental in the NAIOP chapter. You know, we have Cox Business. They've been a great support to us for 18 years. And we have our gold sponsors, DC Building Group, Kimley Horn and Associates, Majestic Realty Company, Panattoni Development Company, Prologis, Southern Nevada Water Authority, the Howard Hughes Corporation, and Thomas & Mack Development Group. And our silver sponsors, you know, as you see these sponsors, as you see these different companies, they've contributed their President's Circle sponsor money. Here's the bronze. That all goes to our government affairs efforts and to pay our lobbyists. So we sure appreciate our gold, silvers, bronze, and copper President's Circle sponsors. Now, we would also like to thank our breakfast meeting sponsors: Affordable Concepts, Carpenter Cellars, Delgado Architects, Compass Development, Cox Business, Doherty Properties, Helix Electric, KNIT, Martin Harris Construction, NV Energy, and SR Construction. Now, a special thanks to our meeting sponsor today, NV Energy. They've been a valuable supporter for our chapter since 2001. At this time, I'd like to introduce Michelle Lindsay. Michelle's NV Energy's business development executive for Southern Nevada. She spent her career in the field of energy, first with the Department of Energy, working on projects in South Carolina and Nevada, and then with NV Energy working in technology development, energy efficiency, and demand management. Michelle holds a master's of science in construction management from UNLV and loves being a part of the local construction community. Michelle, welcome to the program, and we sure appreciate your support.
Oh, thanks so much, David. Good morning, everyone. It's our pleasure to be with you today and to sponsor this NAIOP meeting. And we'll go on to the next slide. NV Energy's business development team supports businesses, developers, real estate brokers, and site selectors with energy solutions through 90% of the state of Nevada. Nevada rates are lower than national, mountain, and Pacific state averages. I used to get to say that we were 50% the price of California. Now we're about 40% the cost of California energy prices. And so it's no wonder that companies are flocking to Nevada. Companies in Nevada rely on low-cost, clean, and reliable energy. With 56 renewable projects in service and under development, our energy mix is now 30% renewable, and we have plans to be 50% renewable by 2030. Our business development team markets Nevada assets to companies and site selectors across the country and around the world. We host the Nevada Site Locator, a free listing service for commercial and industrial properties, and we offer custom rate analysis to model energy costs. Please reach out to us so that we can assist you with your clients. Our business development team supports project development from site selection through design and construction. We provide discovery packages with plans to serve and ballpark cost estimates. And Nevada NV Energy also offers a dedicated team for energy efficiency incentives. In November, NV Energy launched a new construction portal to support customer projects from application through design and construction, and customers can execute contracts, make payments, schedule inspections, and request meter sets all through this new portal. And the full project team has visibility into the project. It's a great new tool, and if you need assistance entering projects or have your team entering projects into this, please reach out. We're happy to assist you through the process. I look forward to continuing the conversation with you. Please follow us through our social media links. Have a wonderful meeting, and again, we're so proud to be a sponsor today.
Thanks, Michelle, and thanks, NV Energy. We're excited to welcome our new members that have joined in the last month. So if you're at the Orleans and you see one of these folks, or you know one of these folks, feel free to reach out and welcome them to NAIOP. If you're not a NAIOP member, I hope you'll consider joining. We're about 493 members strong. We provide excellent opportunities to network like we are at the Orleans, and to connect with each other through committees and social events and principal member roundtables. NAIOP provides relevant and timely information, much like what's going to happen today. We're super excited about that. And through also our education events. Feel free to join or reach out to NAIOP's office to get more information. And now I'd like to turn the time over to Terry Resch from Cox Business, our platinum sponsor, for a few committee announcements.
Well, good morning, NAIOP. The social subcommittee has been busy planning our first in-person members-only social aviators game. You won't want to miss out on the opening game of the season on Thursday, May 6th. Registration is limited, so register today. We have an informative virtual workshop next week, The Global Supply Chain, How Logistics Impact Commercial Real Estate. Members only can attend virtually on April 23rd from 9 to 10 a.m. We have 2 more weeks left to join Team NAIOP and the Make-A-Wish virtual walk. Watch your inbox for social media and our committee challenge videos and registration link. Save the date of our 29th annual golf tournament on Friday, October 8th at Spanish Trail Country Club. On 2021, Bus Tour will be in person. Save the date of our Thursday, November 4th bus tour at Red Rock Casino Resort. Be sure to look for our government affairs update emails that are sent out to our members. And members, we encourage you to get involved. Join a committee. Check out our website for committee details or contact Jonna at the NAIOP office. Be sure to join our members only Facebook page. I gotta say, guys, this is where all the fun is at. It's a great place to get connected and stay informed. Please post about what's happening in your world. And finally, we'd love for everyone to engage in social media today. Be sure to tag at NAIOP SNV in all your posts. I'll turn the time back over to you, David.
Hey, thanks, Terry. So let's get on with our program today. Just a quick reminder to use the Q&A function to ask questions. Now I'd like to introduce Dan Doherty. Dan the Man Doherty from Colliers International. All of you know Dan. He's been around for 31 years in the industrial brokerage side. He's an expert. Many of you know him. So Dan, welcome.
One of the great things about the last 13, 14 months, of course, is we get to sit in front of computers. So can't tell you how excited I am for the people at the Orleans right now in person. Hopefully that crowd continues to grow. And as Doug Roberts just mentioned, he sure misses those eggs at the Orleans. So we have a great panel of speakers today. It's a unique panel in that none of them in their current capacity were in the market last cycle. And with that new panel, with this new group of developers, comes a different talent set, a lot of cross-pollination from other markets. And I think it all makes us smarter when we have outside groups come into Las Vegas who know what they're doing and build projects. So with that, I'm going to introduce our panelists, starting with Dan Fogarty at Becknell Industrial. Dan's a 25-year veteran of the commercial real estate industry and joined Becknell in 2015. He directs build-to-suits and speculative development opportunities in the Western region. Dan is about to break ground on Becknell's third project in Southern Nevada in just over 3 years. And we're going to talk a little bit more about project execution and speed throughout the program, but it's different than what we used to do pre-GFC. You might hear that term thrown around a few times. So GFC, for those of you who don't know, refers to the Great Financial Crisis. And it was the global meltdown of the economy that hit Vegas especially hard and hit Vegas in very unique ways. So the recovery has also been extremely unique. Dan, welcome. Thank you for joining us. Next panelist is Nicholas Ilagan, CapRock Partners. Nicholas is a senior vice president at CapRock and joined the team in 2015. Nicholas heads up the firm's asset managements with every project in every market, including California, Arizona, and Nevada. Nicholas plays an integral role in new developments as well as acquisition, disposition, and as I mentioned, asset management. Welcome, Nicholas. Thanks for joining us. Last but not least, we have Mike Orr, SunCap Property Group. Mike is the only panelist that has been in the market in a prior life with a prior firm. Did a couple previous industrial projects as well as a big office project in Vegas. But with SunCap, he's relatively new to the market. Mike has over 30 years experience in commercial development throughout the Western United States. He's opened new markets for SunCap in Denver, Phoenix, Las Vegas, and Southern California, and has and will deliver over 1.7 million feet, including a brand new project that is just about to be announced. So, welcome, panelists. I'm going to give a very brief overview, maybe just a little bit of anecdotal opening to kind of set the tone for what we're going to talk about today. I don't know if David mentioned it, but Mariana Honeycutt is there for anybody who wants to send questions, and we're happy to address those during the program. So let's go back to early 2014. The market was still in recovery mode. We were chipping away at the 15% vacancy factor, which was the all-time high the Southern Nevada industrial market has ever seen. By early 2014, we had brought vacancy from 15% down to 11.2%, but rents were not where they needed to be to start speculative development, which, by the way, we went over 6 years without building a single speculative industrial building in Las Vegas, which is a record on the West Coast and one of the longest span of times without building speculative buildings in the entire US. And again, kind of back to how hard Vegas got knocked off its feet in the downturn. There was a developer with Prologis by the name of Fritz Weiler who said, when rents get to 36 cents, we will start building on some inventory land that we carried through the entire downturn. He broke ground in early 2014 on a 464,000 square foot speculative building south of Craig Road off I-15. and a company by the name of Systemax, an industrial internet-based supply company, came and leased the entire building before walls were tilted. 36 cents is the comp we have in our database from that deal, so they hit their mark. He then went next door on the remaining land and built a 153,000 square foot spec building, leased that to Premium Waters during construction as well, and then it was game on. And of course, it didn't happen overnight, but over the last 7 years, the velocity has continued to build such that we have delivered over 30 million square feet of industrial buildings since 2014. And what's more amazing to me is we've absorbed over 37 million square feet to bring our current vacancy down to 5.2%. Today, the market sits at 148 million feet. First quarter started off with a huge bang at 1.9 million square feet of net absorption and less than 1 million square feet of supply. So between 2020 and first quarter 2021, we have already brought down vacancy further. Last year set a record in new supply of 8 million square feet and a near record of net absorption at 6.2 million square feet. So as I mentioned, our panelists today all have something in common. None of them in their current capacity was in this market last cycle. And in addition to different skill sets and bringing skills from other markets to the Las Vegas market, we're also seeing totally different types of execution in the development process that we're going to talk about. Not only are we building much bigger buildings than we ever built in the history of Vegas, but we're doing it a lot faster. And I'll give you one quick example of execution. When the market was in the early stages of recovery, 2016, Van Trust broke ground on their Northgate project, 170 acres, 3.7 million feet. That entire project was built out in 4 years. Historically, a project of that size would have taken 15 years to build out. The buildings were a lot smaller, the absorption was less and at a lower pace, and everything happened on a different time frame than it happens today. So with that, I'm going to start with our first question. And Dan, I'll go ahead and start with you. What motivated Becknell to start looking at Las Vegas?
Well, first of all, Dan, thanks. Becknell and I really appreciate being invited to participate in this event. It's exciting to be inching towards where we can all be together again. It's nice to have all the folks in the Orleans together to watch this. Wish we could be there in front of you. So Becknell had been tracking, our company had been tracking the Las Vegas market for a couple of years before we were able to really dive in. And what stood out to us in Las Vegas is, you know, similar to most of the markets that we're active in right now, we saw a lot of population growth, a lot of job growth and fundamentals, strong fundamentals where demand was clearly outpacing supply, and we knew we needed to get into the path of that demand.
Okay, Nicholas, what prompted CapRock to start focusing on Vegas, and what was their first move?
Yeah, great question, Dan, and I appreciate everyone for being in attendance and on this webinar. We're also equally as grateful to be part of this and participating in this market. I think the easiest way to explain it is to back up and explain that CapRock does three things. We buy, we build, and we manage. The buy is buying existing assets. The build is obviously developing new product. And while we're developers at heart, we always enter a market by buying existing product in our value add funds. So about 4 years ago, we entered the market and purchased 3 projects off of Valley View in Arville, multi-tenant industrial product that equaled about 300,000 square feet. And that was our kind of first entry into the market. From there, we've, have 3 million square feet that we're either under construction on or will be under construction on, as well as a new development project that we'll be closing on later this month and be under development on an additional 400,000 square feet at the end of the year. So we always kind of enter a market by buying existing product to get our feet wet. but we quickly ramp up that with development.
Mike, how about SunCap?
Good morning, everyone. As echoed by my panelist partners here, we appreciate the opportunity to share our story and really look forward to when this is all in person and we're able to do all the things that make Las Vegas a great place to do business is the association with other like-minded people. What brought us to Las Vegas during this cycle was a build-a-suit. As if you know the SunCap story, our initial post-recession launch was with FedEx Ground, and having completed over 70 projects for them around the country, we built the West Henderson FedEx Ground build-a-suit when there was nothing there but that. You had the airport, the M, and the FedEx Henderson facility. So having been in Las Vegas prior to that and lived in Las Vegas as a resident, watching the market and ultimately understanding what the industrial development pipeline could be, we looked at Sun Point Business Center in 2017, and then in 2018 Sun Point Crossing, and then now Sun Point West. So it's been a good run for us, and we really appreciate the energy of the city and look forward to expanding on that.
Thanks, Mike. So two of the three panelists have done build-a-suits in Vegas or in the process of. Nicholas, can you give us kind of a high-level view of the build-a-suit you guys are just finishing up north?
Yeah. So the project that I believe you're referring to is our tropical project. That project was acquired about a year and a half ago as part of a land assemblage. As part of that land assemblage, I believe there was 13 sellers, just over 30 parcels that we acquired to put this site together. Originally, it was supposed to be a 4-building project spanning over 2 phases. In the first phase was supposed to be about a 1.1 million square foot building. While we were going through the permitting process and about to pull permits, we did have a build-to-suit come across for a large e-commerce group that's very prevalent in the Las Vegas market, and especially North Las Vegas. And so we're building an 850,000 square foot warehouse for them in what they call a G+3. So it's a ground +3 level of mezzanine within it. If anybody drives by that area, you can still see it's just finishing up in phases as we start to turn over certain aspects of the building for them to do their tenant improvements. But complicated project, very fast paced, certain delivery dates and turnover dates as we progress through the building in the phasing.
So one of the good things, but also a challenge about Southern Nevada that I've seen, and to me, correct me if I'm wrong, Dan, but it explains why you haven't done a build-a-suit in Vegas, because I know Becknell is extremely successful with build-a-suit business across the US. When you guys buy land, you typically put it right in production, and build-a-suit, unless you get lucky, and I shouldn't call it luck, I should call it skill, like Mike did with FedEx, like CapRock did with their, which will we ever be able to say anything other than a very prominent fulfillment company? I hope so, but
I can't say it, but you can.
What you really try to do is you have a site entitled ready to go, but you don't break ground on your spec project. Or if you do, you're able to quickly pivot, like I believe you guys did, Nicholas, where you were going to build a 1 million square foot building. Amazon came along and you brought the footprint down to suit their needs, and there you have what I call a spec-to-suit, what most people would call a build-to-suit. So land is a very important topic in Vegas these days. Before the big meltdown, land was a big topic 13 years ago, in that we were running short of it, and we're running short of it now, in my own opinion. But I'd like to hear from, let's start with you, Mike. Tell me your thoughts on the availability and the cost of industrial land in Las Vegas.
Readily available developable property in Las Vegas is virtually non-existent. It's, I would have never believed that we would be moving on to Miners Mesa to deliver large format buildings. A lot of topo challenges. It's, you know, the readily available land you can find that you can put into production is significantly more expensive than it was 6 months ago or a year ago. So, you know, fortunately, we've got some appreciation and rents are moving the right way, and cap rates are moving, you know, the right way to support the development, you know, that we see coming. But land is key, and infill sites are hard, and everything that's easily delivered has been picked over. So you know, it's a challenging world out there. And you know, I can get into all kinds of discussions about both SunPoint Crossing and SunPoint West. This challenges those sites had, and how we took things that were not what you would consider easily deliverable sites and delivered product on them. So the world's moving, you know, to 2 or 3x land costs from even a year ago.
And for those of you who don't know, what Mike mentioned, Miners Mesa is Apex Industrial Park, several thousands of acres of unentitled land with no spec development to date. Doherty Properties will be the first group to deliver a 650,000 square foot building at Apex, which is about 4 miles north of the Speedway. And Van Trust recently closed on 350 acres out there. So I myself am also surprised that we're continuing to push that far north, but if the demand's there, we have to try to supply it. And those two groups are showing efforts to service that demand. Nicholas, what about CapRock and land and cost?
Yeah, I mean, obviously, since we entered the market and started purchasing land to develop on, and even while we've been in escrow on some pieces of land, land pricing's absolutely going through the roof, especially in North Las Vegas. And if you work your way down to Henderson. I think one question that I would put back on the group, and kind of to Mike's point, is I think it's important to understand everybody's capital structures, and not to steal, Dan, your question, I'm sure that you were going to get to, but in looking at the capital structures and the way that each of our groups are positioning this, there's definitely a difference in what we can pay for land and our basis in the entire deal versus what a longer term holder like a Prologis, like a Harsh could pay or is willing to pay to get into a project. To Mike's point, there's virtually no, you know, readily developable land available. And what you're starting to see, what you see in, you know, markets like Southern California, is the land that is available is going to come with either some hair on it. You're going to have some heavier offsites, which is going to just increase your overall land basis. And so when you look at the entire thing, it's getting more difficult, I would say, for groups like us to compete just head to head in purchasing, you know, 50 acres, 20 acres, 5 acres, because groups are going to come in that are either going to quickly flip it as forwards with as much capital that there is in the markets right now, and where debt is trading at.
So we kind of have two questions going. So thanks for the question on capital. Dan, anything you want to say about industrial land in Southern Nevada and how that compares to the other markets you cover?
You know, I don't know that I can add a ton to what my fellow panelists have said. I will say that it's kind of like the answer to, you know, how is it to find land out here? It's scarce and abundant at the same time, if that makes any sense. There is still plenty of land. It's just about getting the infrastructure to it, and that's what makes it challenging for us, because our capital partners, you know, tend to want to put things into production right away. And it's more about the time than the money, because you can typically buy the land that's not served with roads and water and sewer and has been entitled. You can buy that land right typically. It's just, can you get somebody to give you the time to do the entitlements and to get it all permitted prior to closing, so that you're not carrying that land too long. And to circle back to something you brought up earlier regarding Becknell not having completed a build-to-suit here yet. I mean, I think it's only a matter of time. As you mentioned, we do have a high degree of success with build-to-suits. That's really what our company was based on. And we right now have about 10 or 12 build-to-suit projects going on in 10 markets around the country. And really, it's anywhere where you have a canvas right now, you have a very good shot at landing a build-to-suit because of the demand all across the country. I think Vegas is a microcosm of what we're seeing in most strong industrial markets around the country.
And if I could add to that, Dan, it's not just the infrastructure, it's who owns the land in Southern Nevada. So most people know over 80% of all the land in Nevada is owned by the Bureau of Land Management. So it's a very unique situation where you have so much federally owned land that takes several years to transfer into private hands. We did it in West Henderson on 153 acres and it took 3 years. And the biggest risk I've seen developers run in that process is towards the tail end of that, you can get outbid by someone else. So who wants to take that upfront cost risk on and possibly get outbid when and if it goes to auction? So a variety of circumstances in Southern Nevada create what we call a land constrained market. When people come in the market for the first time, get off the plane, just heading to the hotel, the amount of vacant land they see off I-15, they're scratching their head saying, why did my broker tell me we have a land shortage in Southern Nevada when it's everywhere? Well, it is everywhere, but it's not owned by private parties, and a lot of it has civil issues as well as infrastructure issues, and it's very tough to put into production. So, Nicholas, how are you guys handling the capitalization of your projects with regard to acquisitions as well as build-to-suit and spec development? Is it one group? Is it multiple groups? Is it self-funded? Because it's a very different situation than we were in historically in Vegas.
Yeah, no, great question. So when we entered the market and we're purchasing the multi-tenant portfolio, I believe those were the final acquisitions in our second value add fund. The development projects in North Las Vegas that we have going on right now are both in our fourth fund, and those have a couple different capital partners as our JVs behind them. But we do have other projects, including one that you and your team are on, North Las Vegas, both a multi-tenant industrial project and a new small development, 100,000 square feet, which are in our value add fund. So there's multiple different funds that we're investing out of in Las Vegas, always with debt on them. But I believe one of the questions that I think was going to come up is, where's the debt coming from? These aren't small, regional banks for the most part. On these larger development projects, we're going out to debt brokers to find us that debt. And the competition is pretty fierce right now.
Mike, how about you? Capital source.
So as far as how from a capitalization perspective, our build-to-suit platform, we capitalize with friends and family funds. Our institutional projects, we have essentially two tranches. The smaller, what I would say 150,000 foot and down buildings, we capitalize those internally and hold those. But we have a large institutional development approach that covers the project. So, for instance, SunPoint Business Center was a 300,000 foot building that we had recourse debt on. We developed and sold that building pre-stabilization in 2016. So it launched us into SunPoint Crossing, which was an institutional JV with Colony Capital, which was ultimately purchased by Blackstone. So we started that project with Colony and transitioned into a Blackstone team upon that acquisition. Similarly with SunPoint West, it's non-recourse institutional capital with Diamond Realty Investments. So we look at things in that perspective, and it's a risk mitigating factor how we deploy our expertise and use our people to drive value.
Okay, I'm going to shift gears on you, Dan. What do you see as the main differences between the Southern Nevada industrial market and the other markets you work in?
I think what we've learned that separates Vegas from other markets that we're active in is it is a draw from the Western Seaboard. It can serve the Western Seaboard. And what we saw during this COVID, this pandemic, I think everybody at first, we were all a little nervous when this started about a year ago, wondering how it was going to impact our business and the markets that we operate in. And then specifically with regard to Vegas, we were super concerned that with the convention business and tourism shut down, that projects might grind to a halt here. And what we've instead seen is that Vegas, along with maybe Phoenix, I'll put those two markets together, are a huge relief valve for California, for businesses that want to find a way to serve the Western Seaboard at a fraction of the cost. And that's something that Michelle Lindsay of NVE brought up when she was talking about how much less energy costs here. That's just one of a dozen costs that go into obviously a distribution project. There's obviously the cost of labor and transportation. It's proven out that this market can serve the Western Seaboard, like few others can, at a fraction of the cost. And that is really, I think, going to open this market up for, the foreseeable future.
Nicholas, what do you see as the differences between Arizona, California, and Las Vegas, the three markets you work?
Yeah, so I think the biggest thing is entitlements. So when you're talking about development, we are just finishing a project in Ontario, which is in the Inland Empire West, one of the hottest, if not the hottest industrial market in the nation. And it's all in about 3.2 million square foot project. That project took almost 5 years to entitle. And it wasn't that it was necessarily hairy. It was just agricultural and farming fields. But just getting through California entitlements is extremely, extremely difficult, exhausting, and expensive. On top of that, like a lot of things, when you talk about Apex and other Miners Mesa, there's infrastructure issues. And so you're having to drag power, water, sewer, everything all around and really create infrastructure for an entire master plan development. In Vegas, I want to say that we're getting through entitlements in, 2 to 4 months. Phoenix is taking, call it 9 months to a year, depending upon what kind of land you have. But entitlements is definitely the big thing.
Mike, anything you'd like to add to that?
Nothing. There are some significant physical differences in you get from a coverage standpoint and a frame and structure standpoint, varying between Denver, Phoenix, and Las Vegas, and in a greater part of the country. And some of that's exacerbating some of the cost issues we have. With a hybrid roof system, for instance, you see with wood being so tremendously more expensive than it was, even 6 months ago. One of the things that I've always appreciated about Las Vegas, and I think we're benefiting from as a market now, is the consumption market. So outbound trucks have historically been vacant. So you have I think Dan, you had used the number along the way that 45 million people, pre-pandemic coming through as consumers in the Las Vegas market annually requires a tremendous amount of inbound traffic for commodities, goods, and services to support that. And that creates a lot of opportunity for exiting the market with empty trucks. So I think a lot of our occupiers are seeing the benefit of having that as a way to drive down costs in conjunction with a significant number of other things. Las Vegas has lost to Phoenix for years because of the occupancy cost difference. Phoenix is now pushing up. The west side of Phoenix rents are getting very close to Las Vegas rents, and that's making a difference. The friendly nature of doing business in Las Vegas is truly helping drive demand here as well. With the other option, 1 day turnaround time for a truck, it's really driving traffic north as opposed to east.
Great point, Mike. And a lot of what you talked about is how I explain below the lines, above the line stuff. Below the line stuff is the non-empirical stuff that I see Southern Nevada having a big benefit with regard to things like companies moving here from California, huge inbound migration. A lot of the workforce, if they're moving, go from rental opportunities to home ownership opportunities. Utilities, as Michelle touched on, political climate is a big driver right now, bringing companies here from states that we really didn't hear a whole lot from, like Washington State, the East Coast. So a lot of stuff, as you guys touched on, has changed in Southern Nevada with regard to the way we are seen throughout the US. Dan, you also brought up a great point. Vegas, when the pandemic started, kind of had two roads, and none of us really know whether we were going to make a left or a right. What we were sure of is hospitality was dead and convention was dead. So was the market going to go under? That's one question our team debated in April. Were we going to basically be unemployed for a period of time until this got figured out? We do know 2020 had negative absorption in convention and negative absorption in hospitality, two very big demand drivers for Southern Nevada. Nobody knew how much of this 30 million feet that's been delivered in the market since 2014, and even an accelerated process since the pandemic hit, was going to be outbound logistics stuff. Amazon, for example, in the last 6 years has gone from 190,000 feet to almost 6.5 million feet when their current projects finish. Huge growth in logistics and fulfillment. And as you know, all of that isn't getting distributed to the Las Vegas Valley because we don't have 45 to 48 million visitors coming here a year right now. We will, but we don't right now. So there's regional activity happening with a lot of these groups coming to town and hopefully creating fewer outbound deadhead or empty trucks as they leave Las Vegas. So, Nicholas, what's one thing that you wish was different about the Southern Nevada industrial market?
There was more land, cheaper. I mean, it's probably the reality. It is definitely a land constrained market like we've talked about. You know, Mike just talked about the consumption and the amount of empty trucks going out. I think when we entered the market, we heard a quote from Javier at JLL that 9 out of every 10 trucks that come in leave empty. I think the biggest thing is, as long as we have phones in our hands, and what we've seen through COVID is that e-commerce is going to continue to just go through the roof. And, you know, 10 years ago, the amount of retail sales that were being, you know, were attributable to e-commerce was about 5%. We're up to about 20%. And by, I believe, 2035, there's, you know, an astronomical percentage of where retail is going to go. I think that on top of that, there's new forms of retail coming on with, you know, everything that we've seen from subscription boxes and whether that's cold storage and meats and Freshly and all these groups that you've seen. I think you're going to continue to see that. I think you're going to continue to see convenience shopping just at the touch of your phone. And so I think that consumption, especially to everybody, all the panelists' points that you're getting more inbound migration from California and some of the other Western states of just population growth. I think you're just going to see more and more consumption as that continues. With what you just said, Dan, about Amazon ripping down so much square footage, and that's just floor plate. That's not, you know, G+3s. When you add all that in, it's significantly more. They're doing their research. They know that it's a consumption city and population, and I think that's just going to continue to be exasperated.
Mike, what's something that you wish was different about the industrial market here?
Well, I want to spin it to a little bit, you know, bigger, broader. When we capitalized SunPoint West, you know, and even backing up before then, the absorption we realized, you know, we delivered 750,000 feet in October of 19, and it was completely absorbed by October of 20, only of which 200,000 feet was taken down prior to pre-pandemic. And when I tell people that, you know, and when we're working with capital and with the lending community, when I share that we have seen this, you know, this phenomenal demand in the industrial market, every single person without exception was just, you know, first they did not believe it. I can't believe that Las Vegas is seeing that type of absorption. You know, and everyone in the world equates the Las Vegas Valley to the Strip. You know, so, you know, and we had one convention and center and business tenant in Some Point Crossing. The rest of it was everything else, you know, and pick a business segment between e-commerce and manufacturing, all the things that you expect to see. And also during that time, we doubled the convention center and brought a couple of very large casinos online. So, but without exception, the challenges when doing business in Las Vegas and other markets, the world believes that as goes the Strip, goes the Las Vegas Valley. And that's a challenge for us. You know, we need to find out or figure out or work collectively to transition the perception of the Las Vegas Valley in Southern Nevada from being just that, you know, a huge economic engine, albeit in the middle of town. It's not, there's a community there. Las Vegas is a nice community. You got, you know, Henderson and Summerlin, and you argue over where the best place to live would be. But there's a nice community that has a huge economic engine and access to the largest market in the world. So, I mean, it's industrial is going to see demand in the convention and strip business that it didn't see for a year. And that's going to further drive rates up and open the door for companies to you know, have a lot of sticker shock when they try to expand. When we're used to leasing space at 35 cents, you know, and now you can't get anything for less than 55. So I think there's going to be, you know, continued demand in industrial that we saw, you know, or we didn't see during the pandemic, you know, just from the additional convention and strip business.
And anything you wish was different here?
You know, the only thing I would say is I'd go back to what Nicholas said. I think we all wish there was more available land that was, you know, you could readily put into production, because this is an incredibly exciting market. You know, our company is active in about 20 markets around the country right now, just because, you know, you only have so much capacity, right? And you need to focus where you can, where you think you can make the most hay. And every one of those markets has an exciting story. Typically, the one thing they have in common, where our business is exploding, the industrial business, and the fundamentals are great in all those markets, meaning demand is outpacing supply, and the economics will support how we have to underwrite these deals. You know, land is going up, you know, the cost of it in all these places, but rents are keeping pace and cap rates are compressing. So it works. This is really a pretty simple business. But I'll come back to what makes Vegas probably more exciting than any market in the country. I'd say it's in my top 2 that I focus on, is that we have seen in this last 12 months that it's not just about the convention business. So we keep going over this, but I think that's been proven. To Mike's point, I think most of our national, frankly, I wish a lot of them, you know, there's already enough of us here. We don't need any more of us coming in fighting over what's available. But we've seen this, the liquidity of your marketplace here is just going to go through the roof. All of us are bringing various institutional partners here. And I think one thing that really speaks volumes to how attractive Las Vegas has become to capital is Becknell. We've completed 3 projects here, thanks to your team, Dan, in the last 3 years, and we've capitalized them with 3 different sources. 2 of them institutional, 1 a smaller equity source. We're about to launch our 4th project, and I wouldn't be surprised if we had a 4th partner. And that is incredible, frankly, in my mind. And I can't tell you that that's happened for us in other markets. In most other markets, we get there with a capital source and they tend to repeat. And it's not that these 3 don't want to repeat. It's just that, you know, we're going to go to the most competitive form of capital for each project, and every one of them wants to be here. This is a very exciting place. Everybody that does business here should be excited about what the future holds.
So the liquidity of the market is deserves some thought and discussion, and I'm going to touch on it for a second. We just are finishing a 2-building project with you guys, Dan, a 106 and a 190. Both buildings, one already closed, one's closing tomorrow, both user sales, both companies moving everything to Southern Nevada to occupy these buildings. We never thought those buildings would sell to users. We thought they were going to be for leased, packaged up, and sold to an investment group. So that's kind of one type of liquidity in the market that we really haven't seen much of historically with regard to larger buildings. And there's several more in play right now, going to user groups as permanent homes. Nicholas, along those lines and shifting gears just a touch, on the investment side, how do you view Vegas? I know you somehow keep an incredible touch on the 3 markets you're in with regard to institutional sales. How do you think people view Vegas today versus 10 years ago with regard to investment sales?
Yeah, that's a great question. So as it relates to kind of what you started with, the GFC, I think a lot of people were hesitant on Vegas. I think there was just the negative connotation of what happened during the GFC and coming out of it. And I'm sure Dan and Mike can attribute when they bring new capital into the markets to look at these deals. It takes some digging and convincing on, why it's different. I think the reality is what we've seen, especially with the Golden Triangle sale, is that you have a significant amount of yield refugees. And what I mean by that is you have these large institutional groups that have a ton of capital to deploy and can't deploy fast enough. And what's happening is when you look at those primary markets like Southern California, Texas, wherever it may be, when they're placing in those markets, they're looking at low 3 caps right now, which is absolutely scary. But when you go to a market like Las Vegas or Phoenix on an investment sale, what you generally saw was between 75 and 100 bips spread in cap rates. That's getting compressed, and that's getting compressed pretty significantly and pretty quickly. And so we've seen it. We've received a handful of offers on both our large North Las Vegas projects completely unsolicited. And the numbers versus underwriting are staggeringly different. So we're continuing to see it even on stuff that's not even core plus or core, but value add type projects. So I think you're going to continue to see that. I think that all the capital is on board now. I think there's very few people who don't want to come to Vegas and do a deal. And I think to Dan's point and Mike's point, in all of our projects that we've ever had, I want to say that we've maybe leased 10,000 square feet to tenants that were strip dependent. So when you talk about conferences, conventions, strip dependency, we're not seeing it like you would generally think.
Mike, what about SunCap? Are you holding projects, or are you selling? And how do you view this incredibly heated investment market right now?
So interestingly, we saw 6 months ago, 2 of the capital partners that we've done business with across the country were not interested in growing from a development perspective in either Denver or Las Vegas. We have active projects in both of those. 2 weeks ago and 2 weeks before that, both of those groups, the leads with both of those organizations called, and they're asking, are those projects that you were looking at previously gone? Are we, and subsequent to that, they're looking at reallocations of their acquisition dollars from acquiring assets to development. So I can't imagine how difficult it is for an acquisitions group nowadays. With the demand there is and the challenges associated with deploying capital in 2020 and the getting out of the core markets looking for yield into secondary and tertiary markets, yeah, and don't see any end of that in sight. So it's the point of sale moving from a cash register to your front door is going to continue to drive industrial demand in ways that we can only imagine. And the capital's chasing yield, and the Denver and Colorado Springs secondary and tertiary markets, customarily not core markets. Denver's solidly sub 4 now. So if you'd asked me a year ago if we would see a sub 4 cap rate in Denver, anytime in the next 24 to 36 months, I'd have said absolutely not. And we're seeing that continued cap rate compression in Las Vegas. It's timing's everything, and our business is cyclical. Was the blip in 2020 a recession? Was that, did that check the box for I think it was an anomaly as opposed to a recession, but there was a lot of consternation about investing in Las Vegas that we saw. And we waived contingencies at some point west on March 1st and canceled on April 1, left $250,000 on the table, and put that deal back together in July. Thanks to Keith Ernst, who gave us the 6-month runway with Van Trust to allow us to catch up. So I need to send Keith a bottle of wine. I keep talking about doing that. So it's a really good time to be doing what we're doing, and the Southern Nevada market is as good or better than any. And what's going to throttle it back is going to be readily available land. That's going to be the challenge moving forward. We're going to be tearing down buildings to build new modern product.
So Dan, your first project, as I mentioned, will be as of tomorrow. Let me give that a knock. 100% purchased by users, completely out of the blue, both from California. Your next 2 projects, what are your thoughts on those with regard to disposition, hold? Is anybody approaching you guys already to buy those?
Yeah, so how we approach whether we're a holder or a seller really has everything to do with who our capital partner is. In all these situations, they're bringing 95% of the capital typically. We're in the stack, so the long-term shelf life for us has to do with what our capital partner wants. In one of those instances, and our longest term capital partner, UBS, they're traditionally a long-term holder, and our partners, our investors at Becknell, like that. Because of that, we amassed a portfolio of worth about $2 billion in 30 states across the country, and it's been a great kind of cash flowing asset for us and appreciating. A majority of our other capital partners tend to like to stabilize these assets and sell them. So the first one was kind of that partner up in Speedway. The intention was to sell those assets. So when the users came along and wanted to pay us very handsome prices for them, we of course were happy to oblige them. Our third project that's going right now with the third separate capital partner is also a partner that we'll look to stabilize and sell. I think we're seeing more of that. People that want to put their capital into deals for a short period of time and then churn it. Yes, really, it's all about who we're doing business with, who's bringing the money to the deal that really dictates whether we'll hold or sell.
So the capital side, whether it's the going in capital, created a very unique situation for brokers this cycle. So Nicholas, Mike, or Dan find a piece of land, they put it under contract, and then they start interviewing capital partners. We've already sold the project to the developer. Now we're brought in to sell the project to the capital partners. So we're now, and I'm not complaining, but we're selling the project at least 2 times to the developer as well as the money source, and then hopefully a 3rd time on a stabilized investment. But what is also happening in Southern Nevada, which if you think development is tough, imagine if your firm only acquired projects. It is brutal out there in a situation like the Golden Triangle Industrial Park, where yields continue to get compressed, and there's so much fever to spend money throughout the world, but especially in up and coming markets like Las Vegas, that we now have what we call forwards occurring pretty commonly in Southern Nevada. And that's where a project like Dan's second project that hasn't even broke ground, already got offers on it to buy it. And they said, you know what, we're going to wait. We're going to see how rents are. I know Mike's talking to some groups on his project. So the amount of money that's trying to get in Southern Nevada, we've never seen anything like it. We've never seen the fever for owning property in Southern Nevada. And it does continue to create opportunities that help us fight the land constrained situation. So I know we're going to have some questions, but before we hit those, could you guys just kind of do a round robin real quick? And I'll start with you, Mike. Give me your 36-month projection of how you see the Las Vegas industrial market.
Continuing to expand in challenging sites, Caliche and Fishers and all the other challenges aside, with the readily available or the somewhat available, you have a canvas. We'll continue to drive capital and development in Southern Nevada, and continue to look for land positions that'll support that.
Dan?
Yeah, I agree 100%. I don't see it abating anytime soon, pretty much anywhere in the country, but especially here. And the cap rate compression, we just all saw a portfolio trade that I'm sure stunned us and also excited us, because it makes all of our current projects that Mike and Nicholas and I are underwriting look like pretty shiny. Could probably slide that projected exit down a bit and have a little more spread. So that is going to continue to give legs to the growth of this market, the liquidity and the want for people to be here.
Nicholas?
Yeah, I think in the next 24 months, you're going to continue to see a lot more institutional groups come in and compete and buy projects, as you said, as forwards. I think the owner user market on, I would say, the smaller stuff, 200,000 square feet or less, is going to continue to heat up and be competitive. But I think you're going to see a very institutional owned market. I think you've seen that with Black Creek acquisitions, Link acquisitions, TA, DWS Reef, all of them coming in town and gobbling up the larger product. I think 24 months from now, I think you're going to see a slow in development, just because, the majority of the land has been absorbed and is done. And I think you're going to see a shift to potentially a little bit more infill. You start knocking down older buildings, older projects, and doing land assemblage to do larger projects, maybe Southwest or even more, central Las Vegas.
I think the infill is a great comment, because there's still plenty of sites to build within the valley for people who don't want to take the drive to go to Apex. I think Apex is going to be extremely successful, but that's not in everybody's business plan. There's sites within the valley that have civil issues, as I mentioned. They have infrastructure issues. They have grading issues. And those are going to get built out as we continue to get more dense. And eventually, we will finally get to the point, as Nicholas just mentioned, where we're tearing down buildings. In the downtown area on the east side of I-15, where the original industrial market started, just south of Fremont and Main Street, is where it's probably going to happen first, because that's the most old original industrial product. Problem is that stuff will still trade at $100 a foot. So it's difficult to get that stuff to pencil, but that's what keeps this this business exciting. It's always changing, and there's always new challenges, and there's always new smart people like you three to solve those challenges. So I think we have some questions that Mariana Honeycutt is going to ask. So Mariana, if you'd just like to fire away, we're ready.
Good morning, everyone.
Good
Dan
morning.
and panelists, thank you so much. That was really insightful. And I know I am actually here at the Orleans as well, and it's a very lively scene, and we all appreciate your time this morning. So I'm going to kick it off. We had a lot of discussion on land, and this has actually been a topic that has come up in recent programs quite extensively as well. The first question here is for our three panelists: if industrial land were made to be available in El Dorado Valley or in the Ivanpah Valley, would occupiers favor it over North Las Vegas or the Apex sites?
So I think I'll take that, Mariana. I think that some of the challenges with those areas is access to workers. It's like Reno runs out of real estate, but it's also a small pocket for employees. So it's challenging to compete with. Apex is just the next extension of the Speedway, and which is the next extension of the North Las Vegas North Market, and then North Las Vegas South. And so you're just growing. When you skip over an area, corporate real estate executives have a challenging time getting behind something where the employee base is thin. So that's the big detriment to jumping over a hill. It'll happen when it has to, but it'll be secondarily or tertiarily.
Yeah, I think the three things to consider when you're talking about Apex, I think the easy one that everybody always cites is infrastructure. But to Mike's point, I think labor is the second. And the third is when you get out there, you're really starting to talk about how many trips or turns a truck driver coming from the ports can make. And that can really break it with any traffic coming through the Spaghetti Bowl. And thank God all the construction's done now, but the Spaghetti Bowl, and if there's any weather coming out of California or accidents, the amount of trips or turns that a truck driver can make becomes an issue.
And that is an advantage that both of those markets that Mariana just mentioned, Valley as well as Ivanpah, could prove to have over Apex, is you're closer to the ports and you can go deeper into California from your point of origination and still do a one-day turn. Challenge, as you guys mentioned, is infrastructure, labor, and it's a little pioneering, but the Speedway was pioneering at some point. So I think we're going to see development in both of those areas
We will.
in the next 24 months.
And speaking of Apex, Dan, you had spoke about this earlier too, but for the panelists and Dan, with your experience and knowledge out there, what other challenges have you seen in Apex as as that land and the projects out there have been developing?
So the biggest challenge with Apex over the last 25 years is it's been nothing other than some large heavy industrial users going out there. It's been nothing but what I'll call a land grab. It's buying a site for 50 cents and selling it for $1.50. Buying it for $1.50, selling it for $3. Van Trust just closed 350 acres is about $4.50. So there's been profits taken as the market's gone up, and there's been profits lost as the market's gone down, but there's been no one out there really putting in infrastructure until Wes Adams got going with the big sewer line that's going in out there. So infrastructure, without a doubt, utilities, the biggest challenge for Apex. There's some huge grading projects that will happen over the next 10 years to level some of those mountains. But as development continues to happen in Southern Nevada, we will be building more in the north part of the valley. Hopefully, as you just mentioned, we're also going to be building in the southeast part of the valley, as well as the far south part of the valley, because it just provides more opportunity for more people.
Excellent. Thank you so much. With the next question here, with the increase of land pricing and the decrease of availability, when do industrial buildings start to grow up and become more than one story? The individual asked this question had mentioned that they had seen certain revitalization areas that industrial buildings are 2 and 3 stories. When do you think, or do you think this happens in Southern Nevada?
I think there's a long way to go. I know Prologis has a couple prototype buildings in New York and Seattle that they've done that are multi-story, but they'll admittedly say that those are prototypes. I think Amazon's G+3 and now G+4 model is kind of the first foray into that, but it definitely takes a significant amount of material handling equipment. Nordstrom's, Target, Walmart, Kroger, all have similar type prototypes that they're working on, but those are very low, clear, high in between the mezzanine structures. I think land's still at a basis in Las Vegas and will be for a while that you won't see it. But I think as you get closer to the ports, downtown LA, South Bay, you're going to continue to see some of those things.
Sorry about that. Nicholas, can you please clarify what G+3 is? We had a few questions come in asking that.
Yeah, G+3 is basically ground level plus 3 mezzanine decks. So I know that they've got a building off of the, I guess that's southeast, Amazon does, and it's a G+3 facility. So it's the ground level, and then there's 3 mezz decks above. And as you go through those mezz decks, there's just basically material handling equipment and robotics that are picking small product, placing on conveyor belts, and then getting out the door.
Mariana, I'm going to jump in, and I want to thank Dan and Mike and Nicholas. This has been fantastic. I hate to have to put a stop to it, but this is a perfect example of people giving us feedback on what they wanted to hear on the panels. And this is understanding and meeting a need of some of our members, as well as the education event that's coming about logistics. This is kind of industrial themed. And so I just want to thank NV Energy and our panelists and Mariana. This has been fantastic. Feel free to take the survey after today's program. And I hope everyone stays well and stays safe. Have fun at the Orleans. And guys and gals, thanks so much for being a part of us today. Thanks.
Thanks, everyone.
Thanks for having us.